Welcome to Larking Gowen Insights, accountancy and business advice for all. A series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance with a variety of presenters from across our specialisms. So, let's get on with today's show.
Hello everyone, welcome to the Larking Gowen Insight podcast. My name is Andrew Burwood, I'm a medical partner at Larking Gowen, and today I'm joined by Louise Dean, also a medical partner within Larking Gowen. So today we're going to be talking about the McCloud judgment and what it means for all of those in the NHS pension scheme who are affected by McCloud. So a brief summary as to why we have McCloud. This is to do with individuals who were transitioned from an original section of the pension scheme up to a later section where the standard retirement age was increased. So for those of you in the NHS pension scheme, you would have been possibly within the 1995 or 2008 sections of the scheme, with effect from 1st of April 2015. For most of you, depending on your date of birth, you would have been automatically moved into the 2015 section of the scheme, and that has a retirement date linked to state retirement age. Now, there was a case brought in respect of the firefighters' pension scheme and also the judicial pension scheme, which also suffered from similar movements relating to later age. And Judge McCloud was involved in that case and successfully won on the basis of age discrimination. So hence the reason why it's called the McCloud judgment. What that means for affected members is that your period of pension scheme membership from the date you were transitioned into the 2015 scheme, so for a number of individuals 1st of April 2015, for the period 1st of April 2015 through to 31st of March 2022, your pension benefits are going to be automatically moved back into what they're calling your legacy scheme, which is the scheme you were in prior to transition. So at this point, I'd like to bring in Louise. Hello, Louise.
Hi, Andrew. You okay?
I am good, thank you. It's nice to see you again. So, Louise, can you tell us about who would be affected by this and what comes next?
Yeah, absolutely. So, as you've kind of alluded to in the intro, that there will be many, many members of the pension scheme impacted by McCloud. The level of that impact will be dependent on personal circumstances. So generally, anyone who was a member of a pension scheme prior to April 2012 will be impacted by McCloud. The reason it's really important to know whether you are impacted or not is that you will have some decision making to do at some point. That decision making may be now, it may be when you come to retire, but also you may have some reporting obligations with HMRC as well. So I think generally, whenever we're talking about pensions, don't bury your head in the sand. If you don't understand what's going on, because it is a really complex scheme, talk to a professional and they'll be able to kind of guide you through what you need to think about.
So that's really helpful, Louise. So what do those affected by this, what do they need to watch out for? What comes next?
So they should, and I say should quite loosely, receive some communication from NHS pensions. That's going to be the starting point. So NHS pensions have already written to many of the members of the scheme. And what they will have received is a remediable pension savings statement, an RPSS. So one of those lovely brown envelopes that drops on your doormat. So it will come via letter, via post. And that statement will show the revisions to your pension growth. So we're not talking about your actual pension benefits when we're looking at the remediable statement. We're just looking at the pension input amounts as a result of how much your pension has grown. So NHS pensions will have written to many members already. However, the issues that arose were these statements had some inaccuracies in them. For hospital doctors, the wrong pensionable pay had been used in some circumstances. for GPs, the new growth values were showing as the same as the old growth values, which we know can't be the case. So what they have now turned around and said is, okay, forget all of that. We're basically going to start from scratch and resend out all of these remediable statements. Now, they had promised to do that by the end of Feb, but surprise, surprise, we haven't seen anything come through. And from speaking with NHS pensions, they don't know. They can't give a time frame. They're complex calculations. It's just a waiting game now. But some members will have had these statements and they will have been accurate. So there is action that some members need to take. If you haven't had anything, don't panic. As I said, there are deadlines, but we'll come on to those shortly. They're soft deadlines. There's no kind of financial implications of missing those deadlines.
So, Louise, can you explain to me, if I was a member of the 2015 scheme, and for that 7-year period, I will then be put back into my legacy scheme, why is the growth different between the two schemes?
So the reason the growth is different is both schemes have different ways of calculating the pension. So if we focus on the 2015 scheme, because that's what has happened so far, this is what we call a career averaged revalued earnings scheme. So for GPs, this is no different. How their pension is calculated is the same as it was in the 95 scheme. But if you have non-GP members of the scheme, whether it's just people employed, practice GP staff, hospital doctors, anyone working in hospitals generally, they would have been on a final salary link previously. So in the 2015 scheme, the pension will be calculated as every pound you earn, a 54th of that equates to the pension accrual. However, if we look at the 95 scheme, for those who we call officers, so hospital staff, general practice staff, it's on the best of the last 3 years. So as your pensionable pay increases, your pension benefits will increase in line and also linked to the number of days service that you have. So to keep it quite simple, because the two schemes or the three schemes, because we've got the 2008 scheme as well, because each of them have different ways of calculating the pension, the growth will be different in each of those schemes because they've got to go back now, recalculate what your pension would be in those 7 years between 2015 and 2022. And therefore, what are the growth implications? Because also the calculations on the growth are different in both schemes because some get lump sum, some don't get a lump sum. So it's just a proverbial mess, really. And it's a lot for people to get their head around, which is why we're here talking about it.
Yeah, absolutely right. So with I get my statement through the post. I look at it and I think, goodness me, what on earth do I do with this? How can you help me?
So I think, as I said before, don't bury your head in the sand. We've had so many clients come to us who haven't done anything for years, and either it's not that bad or they don't have a problem, and you've had all that worry for however long for no reason, or it is a bit of a tax hit, but actually they're just relieved that it's sorted and they know what can do with it and they can move on. So not understanding the rules or how it all works is not an excuse. HMRC won't accept that, unfortunately, as an answer. So you need to find someone who can. So how we can help is a couple of different options. I guess before talking about how we can help, it might be useful to know what they've got to do if they do get one of these statements through the post, I think ultimately as well. So you've had your statement through the post, Andrew, and you don't know what it means. Ultimately, go and seek some financial advice, and they will be able to tell you, do you have any excess growth charges to report or not? Are you above your specific annual allowance going back to 2015/16? And I say your specific annual allowance because everyone could have a different amount based on how much your taxable earnings are. And the allowances have changed through time as well. If you've never had to report a charge on a tax return before and you don't have one now, happy days. Bin it, maybe don't bin it, maybe keep it, but lock it away somewhere. But you don't need to do anything with it. If that's not the case, then you will need to do something. So what we can then do is guide you through what the results mean for you. Do you have a charge now that perhaps you didn't before? Did you have a charge now, but now you don't? Or has the charge that you did have just gone up or down slightly? In any of those circumstances, you need to report these changes to HMRC. So we're not reporting to NHS pensions here. We're reporting to HMRC because it's a tax charge on those pensions. And you probably have a couple of options when it comes to looking at the statement. And certainly the offering we give to our clients is two options. One, we just take the figures as they are. We put them through HMRC's tool and we tell you what the tax adjustment. That is then very much relying on NHS pensions having calculated the figures correctly, which we know they don't have a great track record of doing generally. Option number 2 is we carry out a review of those figures to firstly make sure we're happy with them, and then we go and do any necessary reporting. There is some good news that can come out of this. Perhaps if you have buried your head in the sand, that's not my advice. But if you have not reported any tax charges to HMRC before, but you do have a tax charge prior to 2019/20, so 18, 19 and earlier, you don't have to pay that now because from HMRC's perspective, they can't come after you and collect this unpaid tax because they're out of time based on legislation. So you may have got away with it. If you've got extra tax to pay from 2019/20 onwards, not so lucky, you will have to pay that over to HMRC. If you have a refund due for prior to 2019/20, good news, because you can get that back. And the reason you can get that back is because it's not from HMRC. It's not a tax refund because they can't do that. It's compensation from NHS pensions. So it's very slightly different legislation because what they've said all along is no one should be worse off as a result of McCloud. So that's kind of the underlying principle of a lot of what we're talking about here.
So just to clarify then, Louise, I've got a statement which shows growth in my original pension scheme and also the growth in my scheme that I was in up until 31st of March 2022. Now that growth, just to clarify, that's the growth in my pension that has accrued. It's nothing to do with the contributions that I've paid, but it's the growth that I have achieved in that pension scheme. And then I have to compare that against what allowance I am entitled to for those respective years. And I also believe that if you've got any unused allowances brought forward, you may be able to offset some of those. Can you just explain that to the listeners, please?
Yeah. So there can be a bit of a misconception when we look at annual allowance that it's based on contributions. So if I go through my workplace, I've got a pension scheme and I pay in X amount of money, then for me, yes, my annual allowance that I would look at would be based on my contributions, because my pension would be a defined contribution scheme. Public sector pensions, which is what this relates to, we should say it's all public sector pensions. So you might have a friend, you might have a spouse who's a teacher, who's in the army, civil servant. This applies to all of those as well, not just NHS. Um, so it's for those in the NHS or those in these public sector pension schemes, these are defined benefit schemes. So contributions have no bearing on how much you get for your pension. It's just a mechanism to fund the pension scheme. So your contributions are paying out for all of these retired members who are drawing all their lovely, nice pensions. So contributions are irrelevant when we talk about all of this. Other people will go, but I'm not going to get £60,000 of growth in my pension. No, you're right. you aren't in normal day-to-day circumstances. But as with everything within the NHS, it's not straightforward. So let's say your pension goes up by £2,000 from the start of the year to the end of the year. If we're looking at the 2015 scheme, we multiply that 2,000 by a factor of 16. Don't know where that came from. Some pension actuary would have decided this figure. So that 2,000 very quickly becomes 32,000. So you can see how we can really get close to these 60,000 allowances as it is now, but it used to
And
be.
that's not just when you look at the annual allowance and the growth in your pension, you're not just looking at the growth in the 1 year of pension that you have effectively acquired. You've got to go back and look at that pension pot that you have already accumulated and factor in the growth in that one as well. So I believe there's a factor that's applied to pension growth for previous, Louise, which is separate. So when you're looking at your pension that you've accumulated already, there's a factor for that one as well, isn't it? So
Yes.
yeah.
So when you look at the benefits you've already built up, they go up by inflation plus 1.5%. So the inflation bit effectively can be ignored now because they changed legislation to basically ignore the impacts of inflation due to some pretty horrific figures a couple of years ago. So now, basically, you also have to factor in an extra 1.5% growth on pre-existing benefits. But also in the 95 scheme, that factor of 16 becomes 19 because you have to factor in a lump sum. So this is why it's really important to get specialist advice, because what we see day to day is not everyone understands how the NHS pension scheme works. There's so many different nuances to it. You know, you could have someone with mental health status, which is another complication. You could have someone with an added years contract. There's just loads of different variables that can add more complexity to the situation.
Okay, so I've had my statement and it's automatically transferred my 7 years into my legacy scheme. What if I would prefer for my benefits to stay in the 2015 scheme? Can I do that? Because whilst the whilst the retirement age for, let's say, the 1995 scheme, I know that that's maximum age of 60, whereas 2015 is linked to state retirement age. So I know that if I take it back into my legacy scheme, I'll be able to draw my pension sooner and get a higher amount the closer I am to 60, because I know that it's reduced if I take it slightly earlier than that. And I also know that my 1995 scheme comes with a lump sum entitlement of 3 times pension tax-free. So that looks really good to me. However, the 2015 scheme, I know that the contributions that I am paying are giving me a higher pension, albeit that I have to wait longer for it. So do I have to go back into my legacy scheme, or can I leave it in 2015?
You have a choice. You have a choice to make, because this was enforced on people. And they had to put a remedy in place to remove the age discrimination. So the easiest way was just to force everyone in at a later point at April 22. But as you say, not everyone will want that. So, yes, you have a decision to make. And the decision will come on retirement or just before retirement. And you can choose to leave that 7 years in the legacy scheme as they have now adjusted it for. Or you can say, actually, no, I would rather it in the 15 scheme, please. Thank you. Um, and that will be a very personal decision. Everyone will have very different thoughts on that. And that's where you need to go and see a financial advisor. I think with everything that we do, with everything that we touch on pensions, the overarching advice we can give is get financial advice. We can do the number crunching, but we cannot give you that tailored specific advice around your retirement planning and what to do with your pension. But those points that you've made are exactly the things to think about. When will you want to retire? When will you stop working? Because you might draw your pension and carry on working. How much do you need in retirement? Do you want a lump sum? Don't you want a lump sum? You may have other decisions to make, or other choices to think about, because you may have opted out for a period of time because you were suffering annual allowance tax charges quite regularly. Now, if you hadn't gone into the 2015 scheme, would you have still had the tax charges? If not, maybe you wouldn't have opted out. So we have what's called contingent decisions. So the choices you made were based on the information you had at that time and the legislation that was applied to you at that time. If we now know different, which we do, would you have made the same decision? Would you maybe have cancelled your added years contract or not? And these are really quite complex decisions because, when we've spoken to financial advisors, there could be 150 different, nuances to whether you should have made that decision or not, because everyone has another 2, 3, 4, knock-on effects. So it's a bit like a snowball effect. So yeah, lots of decisions to think about and do what's right for you at the end of the day.
Sounds like really good advice, Louise. One thing I am, as a member of the NHS pension scheme, one thing I'm really concerned about is that I may have some tax to pay that I haven't budgeted for. How does that work? Are there any other options?
Probably a couple of different options. I think generally, again, first off, if you've got taxes that you can't physically pay for with cash that you have, you speak to HMRC. Again, it's not a case of burying your head in the sand and just hoping it will go away. It never does. But specifically to annual allowance tax charges, you can do what's called a scheme pays election. So this is ultimately a loan between you and NHS pensions. So they will pay HMRC the tax charges. They will charge you interest on those. When you come to take your benefits, NHS pensions will work out how much you owe, and they will do a deduction from your annual pension to recoup those benefits. It's usually around a factor of 20. So let's say you owe NHS pensions 20,000. It does depend on your age that you take the benefits, but it's on average about 20. So they would take £1,000 every year from your pension until you die to recoup that tax charge. So if you live for more than 20 years, you're going to end up paying more. If you live for less than 20 years, you'll end up paying less, but you're not going to be worrying about that, really. Now, there are deadlines for getting those scheme pays in, and it's usually the 31st of July after the end of the tax year. So for 2023-24, the tax return had to be submitted by 31st of January 25. You would have had to report any tax charges for pension growth on there. So you would have had to decide whether you're going to pay it personally or do a scheme pays election. And that election then needs to be submitted by the 31st of July 2025. Now, given the delays in the RPSSs coming out, there may be flexibility in that deadline because people might not know what their growth figures are. Again, everyone goes, what would you do? I can't answer that. It comes down to, do you have the cash to pay it? Because if you don't, your options are more limited. It also comes down to maybe how close you are to retirement, and therefore how much interest is actually going to be charged. You know, if you're 20 years away, the interest is inflation linked, so could rack up quite quickly. Um, it used to be beneficial when we had lifetime allowance charges, but we don't have those at the moment, so they're not quite so much of a factor now. So again, financial advice is generally the best way to go here. The one thing we probably haven't actually mentioned is the time frame for making these amendments to HMRC, which again are not straightforward. There's like 4 different deadlines. Um, if you had extra tax to pay for any year between 2019-20 through to 2022-23, the deadline was actually the 31st of January 2025. However, HMRC had said there's no financial penalties for missing that deadline. And obviously, if you haven't had an RPSS, then actually you get 3 months from the date you get your RPSS. So to clarify, 31st of January 2025 or 3 months from the date you get your RPSS, whichever was later. If you have a refund, you have until 31st of January 2029. So not really anything to worry about at the moment. I don't know why those people need an extra 4 years, but apparently they do. If you are a retired member, then I think you get even longer. I think you might get to like 2031 or something like that. It's way off. So again, it depends on overpayment, underpayment. Are you still contributing? Are you a retired member? 4 different deadlines. Not sure how anyone is supposed to navigate through all of this generally.
Which leads on to the question, Louise. It is clearly very complicated with all the scenarios and all of the work that needs to be done. It's a lot of work for an individual to do. So I suspect the next question is, how much will this cost?
That's, yeah. How long's a piece of string? Probably is my answer to that one. It's difficult to quantify. So we, as a firm, have a package that we offer. When I said about the 2 options earlier, do we just report any differences, or do we review the figures? So we have our packages that we would offer. Now, that will be, varying depending who you go to. And the more in-depth work you want doing, the more it's going to cost you. And unfortunately, you don't get tax relief on these type of fees around your pension. What I will say, though, is because they said no one should be any worse off as a result of McCloud, they have what's called a cost claim back scheme, they being NHS pensions. So if anyone incurs professional fees as a result of the McCloud remedy, they may, being the operative word, be able to claim up to £1,000 back from NHS pensions. Now, we say may because the guidance is quite strict around this, and they won't give you examples of what you can claim, more around what you can't. So what they really say is if you pay for something that you could get for free from NHS pensions, they're not going to pay you for that. So if you go to an accountant, come to us and say, can you calculate my growth figures for me, please? I'll go, yes, here's a bill. You can't claim that back because you can get those growth figures from NHS pensions for free, because that's what the statement is. Now you go, yeah, but I don't trust them, so I want you to check them. Fine, you couldn't get that from NHS pensions, but they will come back and say, well, you chose. That wasn't a necessity. You chose to have those pension figures reviewed. We're not going to pay you for doing that. Where they are likely to pay out is if you perhaps have to get advice around contingent decisions, for example, because you couldn't really work out the impact of that yourself. It's because of the McCloud remedy you're having to think about those. So it's those type of scenarios that you could potentially claim back. Now, if you need support on using HMRC's tool, you could potentially claim those back. And that's the angle that we will come from as an accountant. We're providing you with support to report your changes, to go through the remedy process with HMRC. But the scheme is there to claim back the costs, but you may be limited. And depending what scheme you're in, I know we're very focused on GPs, but for example, in the civil service, it's only a £500 limit. So it's not a given that it's £1,000, and the MOD may not have their own scheme, or it may be different. So a lot of what we're talking about is quite specific to the NHS, but others will have their own guidance and around what you can claim. So yeah.
Very complicated. Well, thank you, Louise. That's been a really helpful session, which I hope our listeners have enjoyed. I think there's a huge amount there for any members of the NHS pension scheme to consider. So it goes without saying that should anyone need any assistance with this, then please do drop us a line or give us a call. So just to summarise what comes next, first step is to watch out for a brown envelope landing, hopefully on their doorsteps in the coming days and weeks. Sadly, we don't have a time frame for that, but let's hope it's soon. When you receive that, please do something with it. It's important. It has a big impact on your pension benefits on retirement. You need to make sure that your record is complete and up to date. There could be some tax due back to you or compensations, Louise mentioned as well. You do have the option to make use of scheme pays facilities should you need to, but again, you have to take positive action for that to happen. So thank you, Louise. Really enjoyed that session. For the listeners, links are in our show notes. So thank you very much for listening. Have a good day.
Thanks, everyone.
Thank you for joining us for Larking Gowen Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larking-gowen.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.